Hey guys, welcome to another episode of 21st Capital Bitcoin Quants. Today, as always, I have Z Crypto Wizard, senior analyst at Glassnode, to review the market status and see if the market is overheated right now with all the pump that has been happening lately and a little bit of a dump. It's a good time to review the market. Hi Z, how are you?
I'm doing great. How you doing?
Very good. I'm excited to see what you got for the market status. We are in a very interesting place. We are very close to the election, just days away, right? And the election can have significant effects on the future of Bitcoin. One candidate seems to be supportive. The other candidate is so-so. But at the same time, there's discussion that whoever comes into the office, they're not gonna cut spending. That's kind of that's a great solid assumption. So spending is increasing, and essentially, what will happen, even ignoring who wins the election, the fact that election is over is going to give a lot of confidence to the stock market and the asset markets, and from that, Bitcoin's market to resume the rally. Now, looking at the market right now, let's see if I can. Yeah. So in the last 7 days has been positive with 3% gain, but then right after we touched just below the all-time high, we dumped significantly, and first a little bit, and then since yesterday, slightly more, 1.3%. A lot of it is, although, due to the stock market itself, because yesterday they had a pretty significant dumping across all markets. And but we'll see where Bitcoin goes from here. Today, our question is: we are almost at all-time high. 69,000 is just 4,000 below the prior all-time high. The question is Bitcoin overheated at this point, or is it a good place to actually add? Now, Z has a lot of details and discussions and charts from on-chain data and other sources to shed light on this issue.
Yep.
So let me share your screen. All right.
Let's do it. Yeah. I mean, at the beginning, let's just be clear. I know like lots of talk about elections going on, and I agree. The consensus, at least, is one of them apparently is anti-crypto or Bitcoin. One of them is about Bitcoin. I mean, they're talking about, and that's the consensus. But down the road, they're going to print money. No matter who's going to be elected, they're going to print money. And I see a lot of talk about tax cut or taxing and stuff. Government is not, sourcing its money from tax. Tax is just the illusion. They're funding their agenda by printing money. So as far as they print money, I am confident about Bitcoin price in long term. So that's my stand. I understand in short term some turmoil, geological conflicts might cause the price volatility, but at the moment, I'm really, really positive in long term about Bitcoin, like always I am. But speaking of that recent rally, a lot of people are asking, okay, we're reaching again to 72,000, and a lot of people might say, oh, are we actually forming a top? So we are here trying to shed some light on it and see if we can use on-chain data and borrow all this, use this information and make a better decision. That's the purpose. So let's get into it. If our audience has already followed our content or read the on-chain data, they know we have two cohorts or two subcategory of investors, and short-term holder and long-term holder. That name might be a little bit like hard to understand, but the idea is long-term holder who are the investors who are less price sensitive. We are showing their holding with the you can see here the blue line is showing how much of the supply is actually controlled by this long-term holder or long-term investors, the one that are less price sensitive. And the red is the short-term holder or new investors, the investor who entered the market throughout this red time period. Though these investors are more price sensitive, and they will react to volatility much more than the long-term holder. That's the idea behind this segregation among these investors. And the reason we focus on the short-term holder or recent investors is because they are the one that forming the local tops and bottom. That's the reason we focus on them throughout the rest of this report. But as you can see, in starting, around June or July, early July, you could see the long-term holder, the blue line, was rising because the sentiment was huddling and market was showing some weakness. The sellers or the long-term holders were just staying aside, and they were not really active because there was not much price action or opportunity to seize and exit the market. As you can see, their supply was growing. That's actually the recent buyers that were not selling, and they were maturing, and their coins were actually added to the long-term holder, and the short-term holder supply was reducing because they were not actively entering the market and buying new coins. But after, I think it was late September or mid-September, when price was breaking above 60,000, you could see, well, the market was showing some positive price action, price momentum. They were selling, the long-term holder, and short-term holder, or the buyer side or demand side, was showing some momentum as well. Even in the recent, if I zoom in, even the recent rally to 72, you could see the long-term holder were selling, you see, and from almost 14 million, they dropped to 14 million, 0.4 thousand, they dropped to 14 million, almost to 28,000, and the short-term holder were buying. So you could see this rally gave some opportunity to these long-term holders to cash out. But the question is this rally make the market as heated as it was in back in March 2024? To answer this question, we have to look at this, the question is market top heavy or not? That's the main question. If you look at the number of coins that was acquired by these new investors, in terms of
do you have them? Do you have them open on the other tabs as well? Yeah.
Oh yes, it's zoomed out. At October 29th, 2 days ago, if you see around 2.7 million coin was in controlled by this short-term holder. It was acquired in last 6 months by new investors. When you compare it to the top in March, which was around, I think in max was 2.99 million coins, it's almost 200,000 less. But you could see it's the same range. So the number of coins held by these new investors are pretty the same. So if you look at
that's about 10%. That's about 10%.
And they are all
total
in profit.
supply.
Exactly. And these are the coins that are in profit, by the way. So first of all, these coins are profit. That means the price today is above the acquiring price or cost basis of these coins. And also they are owned or controlled by the new investors. And they're much more price sensitive compared to the long-term. Well, that's why we care about them. So in terms of size of the supply that moved in the last 6 months, yes, we are in a comparable situation to March 2024. The question is, this is just a binary metric, by the way. So we look at every coin owned by this new investor and see if they are in profit or they're not. Then the question is how profitable they are, because a coin could be in profit with 1% margin or 100% profit. So that's what is really important as a next step. We have to look at that. The metric that answers that question is MVRV. MVRV is the ratio of the current price to the cost basis of this specific MVRV variation is for short-term holder or new investors, is looking at the ratio between current price and the cost basis of the new investors. At recent market top around 72, it was, I think if you zoom in on an hourly basis, it was around 1.14. So that's what this tells us. It tells us the new investors who entered the market in last 6 months were sitting on average on 14% profit compared to their cost basis. But when we go back and look at the same metric in March 2024, it was 1.43 for 1.45 almost on an hourly basis. That tells us they were sitting on aggregate 45% profit back then. So yeah, in terms of number of coins in profit owned by the new investors, we are at the same level. But in terms of intensity of this profitability, we are way lower than what we had in March.
What was the final number again? What's the today's value?
Today is 1.14, which tells us 14% profit on average.
Okay.
But in March it was 1.43. That is 1.45. I think if you zoom in, let me zoom in exact and give you the exact number. It was 1.45. So that's almost like more than 3 times more profitability in March.
This
So
is
that what
mind-blowing. I mean, you can measure the short-term holders' profit through on-chain data. That's just unbelievable.
exactly. And bear with me. We are not talking about 1 or 2 exchanges. We're talking about 2.7 million coins. That is a big amount of supply that we're looking at. So yes, in a binary view, I'll repeat myself. I just want to just give you a clear picture. Yes, the number of coins that are in profit and they're owned by these more price sensitive investors are at the same level, almost the same level. But in terms of profitability, the intensity of the profitability, we are way less than what we had in March. So that gives us some room to grow. Like the rally can go on if we just take these 2 metrics. But as you know, there are hundreds of metrics and we can't not just make our decision based on 2 metrics, even though they're really important. The
So
other metric that's
let me mention this. The 2 million that are held by short-term holders at today's prices will be $140 billion. Okay, and what you're showing us is they are 14% in profit, right?
Yeah.
So out of the 140 billion, 20 billion is their profit. So there's 20 billion profit sitting in the hands of these short-term holders, which are statistically more likely to sell. That's I guess how I would put this in context.
Yeah, and I have to repeat this, that this is on average, like not that we're not saying all short-term holders are on 14% profit, but on average they're on 14% profit. And by the way, using on-chain data, we can actually measure the exact number of unrealized profit owned by this investor, but the investors. But this is not the topic today. But in future we'll talk about it. To complete the picture, we said, okay, number of coins owned by these people are 2.7 million coins in profit by the new investors, close to 2.9 back in March. The profitability is 1/3 of what we saw on aggregate. Then we have to see how they're reacting to this profitability. Because yes, 14% on average is not comparable to the March, but it is profitable for some. As you can see, the next metric we use always is SOPR, which is looking at the cost basis and spending. I mean, the short-term holders that are spending or new investors are deciding to exit, looking at the price today and look at the ratio between that price today to their cost basis. So we look at the one that are spending, how much profit they're realizing. And this metric is showing like 1.2. That is the number we see today. I mean, on an hourly basis, and there's a 72-hour moving average to just cancel the noise. But when we look at the back in March, it was 1.6. So it shows the margin of profit being taken away by this short-term holder is way less than what we saw in March. You could see there is some sort of rally, I mean, trend there. You could see they are recovering from the low number we saw in September, or we saw a lot of loss being realized in August. But right now, that rally, that trend is being sustainable. You could see some correction is totally normal in any rally. It still is much less than what we had in March. So yes, they are in profit. Most of them are in profit. The profitability margin is thin. That's why you see not many of them, not much profit being taken at current situation. That gives us, again, some room to grow, some room to have the rally. I mean, it can sustain longer if we just look at the short-term holders. So far, like, was the picture clear, Sina, to you?
Yeah, and what's interesting is like even though we have gone from like since last year from 16K to 73, these short-term holders still managed to be in a lot of loss just a few months back. So and again, that just tells us that they typically enter in the worst time, like right after all the increase has happened, right after all the ETF effect pushed the price higher. They have come in, and then as the market begins slowly bleeding, they have been at a significant loss. Actually, what was the lowest point in? Yeah, so
In MVRV?
yeah, what's
Yeah.
that low point?
So the low points back in August, it was 0.76. That means
25.
on average 24%. I was the unrealized loss among these investors. That is significant. When you look at the historical value, let's look at the last 5 years. It was comparable with almost the FTX post FTX crash. It was, I mean, it was even worse. So you can see it was equal to, I mean, somewhere. Yeah, we look at back in November 2022. That's the level of loss almost we experienced back in August 2024.
So
Yeah, like
Bitcoin can be at 60K and you could still be at a significant loss. That's one lesson here is don't be a short-term thinker, guys.
exactly. And you can see the psychology play itself really well. They realize loss at the bottom and they buy at the top. It might be funny, but looking at this data, you could see there are many people doing so. And the power of this data is actually helping people to make the right decision. And hopefully, one of the outcome is to make people be huddler, not just out of force, but out of like knowledge. So so far we just focus on the on-chain data, and as you know, the beauty of this data is much more visible when we look at the confluence between on-chain data and perpetual ETF data. All these dimensions, when it comes together, it is really beautiful. The second section of this report, I want to focus on the ETFs and perpetual. Interestingly, when you look at the flow, I mean the USD dollar flow, or this one is a BTC. Let me zoom it out. This is looking at the 7-day moving average of number of coins that are flowing into or flowing out of US ETFs, and it's the net flow. I mean the inflow minus outflow. The number we saw on it. Let me cancel it. Just look at the daily. We had like numbers close to. Look at it. Like it was on October 24th, we had 15,000 coin inflow per day. And if you do this 7-day moving average, you could see this level have been seen back in February before we hit, maybe the price was around 50,000. You could see the shift is obvious. You could see after early October, the inflow was picking up. And now the numbers are comparable with early February in 2024. So this rally was actually, it could be like a spot driven and mostly driven by the ETF demand. It is really interesting, isn't it?
Yes, actually, BlackRock broke the record, I think 2 days before, by attracting $875 million, almost $1 billion in one day, which was higher than the best thing they did, which was back in March. So
Crazy.
this is like you said, clears a significant shift as well in how the ETFs, because like I'm looking at the data. Like before October, ETF flows weren't were significantly slower than earlier in the year, but that has changed. Now we are back into periods that looks a lot like the top of the Q1, where we were seeing all those explosive action.
Yeah, like, and I think in aggregate they're hodling around 1 million coins, I guess. And remember, it's less than a year. So less than a year, the aggregate number of coins controlled. I mean, they're a proxy to their client for the clients, but I mean, 1 million coin in less than a year. It's mind blowing. So by the way, the recent rally was also have some support, or I mean, you can see the buy pressure or the demand was picked up on the ETF side. So we could say with a good certainty that this rally was supported or had a really strong confluence with the ETF inflows. After looking at the ETF inflows, I want to focus on the perpetual market, which are, a really great proxy or probe into the demand side of the market. We have this interesting metric that I think it needs a lot of love in terms of talking about it, looking at the models that can predict or follow the behavior of this metric, and that's funding rate. Like everyone heard about it, but it needs a lot of work in terms of understanding the details. Back in last week, I think, or 2 weeks ago, we said the moving average, like especially the weekly moving average of funding rate, is really important because yes, on a daily basis, you could see a jump in the market or a volatility that pushed the funding rate above the equilibrium level, which is 0.1. But if you look at the moving average, weekly moving average, when we break above the threshold, the equilibrium line or equilibrium level, in a sustainable way, that is a sign of demand in the market, the perpetual market. What does that mean? When we break above 0.1%, that means there are people who are willing to pay to keep their long position open, and that's costing them money. And actually, we can measure that on an hourly basis. This metrics, let me zoom. Let me open it and zoom a little bit. This metric is measuring on an hourly basis how much the long side of the contracts in perpetual market, the ones that Glassnode follow, and I think Glassnode follows the most important ones. On an hourly basis, it measures how much money or premium the long side of the perpetual contracts are paying the short-term holder. So when you see this metric is picking up, that means there are lots of people interested or show the appetite to be long in the market. That is the interesting part of this metric. And if you look at the metric, not the moving average, the actual value, back in March, close to the peak, we were seeing somewhere close to 2.7 million per hour. That is a huge number. It was the premium that the long side was paying to the short side. At the moment, like as of now, we are looking at the number is 227. So 200,000 compared to plus 2 million, 2.6. So is in order of 10. Like you could see, the is much less than what we saw in March, and that is a sign of the market not being as overheated as what we saw in the March. I mean, if you look at the weekly moving average, it was around almost 900,000, close to 1 million per hour. Right now, the moving average is 230. So you could see the magnitude of the premium paid by the long-term hold. The long side of the perpetual contracts way higher than now. This is adding to the conclusion we made based on the short-term holder that yes, you could see there is some trend, positive trend. You could see the demand in perpetual for long side is picking up. But when you compare it to market structure back in March 2024, it is not as overheated as we saw in March. So if there is no external factor affecting the market, let's say we exclude them and we only rely on these metrics, it seems we have a lot of room to grow, especially looking at the ETF inflow. You could see they already into the market and they already, added to their portfolio all the way from early October till now. So this 1 month of strong inflow by the ETFs. All, when you look at the whole picture, you could see the short-term holder, yet a new buyer are in a good position, but their profit is still thin compared to the recent top. So that manifested itself by seeing them not realizing too much profit. So that is a good sign. And the ETFs are picking up. The perpetual market is showing some positive trend, but still way less heated than what we saw in.
This is where we want to be, right? We want to see futures market like the one you were showing last. We want to see funding rate to be picking up just a little bit, but not too high, because when it's picking up, that means there is excitement. Excitement is good, but it can quickly build up a huge amount of leverage in the system and explode. So one of the conditions for rapid growth is some of these speculators also joining the market, but the ideal place is when they are really active, but also there isn't a lot of leverage buildup in the market, which is exactly where we are.
Exactly. So you want some demand, but you don't want insanity. Like when you go, the weekly moving average of the funding rate goes above 0.2 or 0.3, that is when, yes, there's some excitement, but it is not sustainable. At the moment, it is really positive. We are back from the negative regime. You could see the demand is there. Like I said, it's really positive, but we should watch this metric on a daily basis and see, okay, if it's really heated up, that's a strong sign that market has a potential for a correction.
A lot of good points here. So the short-term holders are, just to summarize, short-term holders don't have a lot of profit. They have some profit, which is nice for them, but not a whole lot, only 14%, which is significantly less than some of the recent major corrections we've seen. And then their MVRV exactly shows this fact. We also don't see them realizing a lot of profits yet, right? As the
Yep.
price goes up, we might begin to see some sales going on, but not yet. So they're
Yep.
sitting on the profit and waiting for what's coming in the future. Yeah, exactly. So as you're showing, they were selling a lot more back in late March, where the
Yep.
market corrected, and they're not at this point. So it's like short-term holders who set these local tops and bottoms. They are happy where they are, and they're waiting for more gains rather than feeling the need to sell.
Yep.
And also, when
And
you look at just looking at exactly, ETFs are picking up significant amount of hodling going on in there. The flows are high, and like you said, we can kind of think of this as ETFs coming in and supporting price action by spot purchases. So it
yep.
gives us additional confidence that these purchases are not futures and spot, and they are spot driven by more stronger hands. And lastly, when you look at futures markets, it also shows that we don't have a lot of leverage and insanity going on in there, which can if the funding rate goes to really high levels, we would get worried because bubbles might form and explosions there might crash the price. But we are nowhere near overheated prices. I would actually say we are still underheated.
Yeah, I mean, looking at the ETF inflows, I would agree, because that amount of buy power or strong demand, we, I mean, we cannot say anything with 100% certainty. But if I was betting based on what we saw in March, I would say, and look at the number, we are the same price, like we're 72, the same level of, I mean, the price action or the price level is the same, but look at the funding rate. We're not even close to that insanity, or I mean, the overheated future market. So yeah, like if someone wants to bet, that's the time to bet. I'm not trying to be directional, but if you look at all these metrics, that is not showing any sign of overheated. But who can predict everything? Like it could be an external, I don't know, a war or an election result can change the scene. If you exclude them, everything is looking really positive.
Yeah, just to add a little bit to this, the general MVRV is also sitting in a nice place. Like historically, if I can draw, yeah, historically 2 is a really good number. We are actually below it, right?
Yeah.
And but again, because we don't know where the top is, we can normalize this by volatility. And this volatility adjusted MVRV puts us at 40% right now. If I can, yeah, draw something. This is 39 or 40, something like that. What did I do? Yeah. So considering that this metric goes from 0 to 100%, we are at 40. So we are not even past 50%, which kind of gets us to the bubble territory. And it's all looking very kind of the feel of the market is that we are just warming up and getting ready for the real price action. So it's not like we are too cold, right? Some price appreciation has happened. A lot of people have been given notice. There is crazy speculation going on in the stock market. MicroStrategy is exploding. ETFs are exploding. Futures traders are waking up. Short-term holders have some nice profits, but not too much. Everything seems to be supportive, other than like unexpected black swan events that might change the trajectory, and even then it will be very short term. Other than that, everything seems to be shaping up very well for a significant move from here.
Yeah, agreed. Hopefully everyone have a better picture now and make a decision based on data, not just literally looking at social media. And it is wrong to make a decision on what you feel, but I think you should make a decision based on what you see in terms of data and interpreting what is available. So let's see how it works.
Awesome. Well, I think we had a slightly shorter session today, 30 minutes, but
Yeah.
like a nice package, very compressed package of data to understand how an analyst thinks about the data and how to interpret the data, and make sense of it in a short amount of time. So this was great. Thank you very much.
Oh, my pleasure. And happy Halloween to whoever is celebrating it. I think it's Halloween everywhere. You're celebrating the same day as the
Last
weekend?
night was the main
Okay.
activity. Maybe they'll do some tonight as well. But yeah.
Yeah.
Yeah. I think my Halloween scare is the election. I'm waiting to see a lot of craziness.
Yeah, I mean, as someone that is looking at this thing from out of US, I really hope this thing gets over. Like, I'm waiting. Whoever is going to be elected, let it just get over it. I mean, it's too long. It's been on the top of the news all day. And the worst thing is bothering me is my Twitter feed. I try to ignore, block, don't look at it, and it's not Bitcoin only anymore. It's just even the Bitcoiners are talking about elections. So hopefully we get over this next week.
Yeah. Well, we won't, but after
Okay.
next week, it's going to be a few weeks of fight over the results, and then after that, still what the new president will do. That's going to give us a new cycle. So, mute button is your friend, I think.
Agreed. Nice one.
All right. Well,
Yeah.
everyone, thanks a lot for joining us. We are doing this every week on Fridays at 4 p.m. Eastern time. So join us if you can live. Otherwise, the recording will be on Twitter, on YouTube, and everywhere else. We've had about 2,000 people so far, 1,700 viewing the live. Thank you very much for being with us, and really appreciate Z's wonderful knowledge that he shared with us today.
My pleasure. Have a good weekend.
Have a good one.